All right, let's dive into it. Happy Friday to each and every one of you. Hope you're doing well, ready for a nice weekend. I know the weather here in Nashville has been rainy all week. It's supposed to start brightening up and be nice and sunny, so maybe get outside and get some outdoor activities in. Yes, Brent, we do have our full advanced group mentoring class, a second one. We usually only do about one at a time, but we had so many people interested, we are going to do two, and we've got everyone ready to go for that group. So I believe an email is going to go out this afternoon, so we can get started and have the first meeting next week and kind of get with everyone's schedules and start that process. So hopefully we'll get that going soon. So look for something there. So yeah, so back to this meeting. This is your time for getting questions answered, going over examples, whatever it is that you'd like to dive into. Are you struggling with something in your trading? Use the Q&A box to submit those questions. We'll kind of go through them first come, first serve. And the time flies by, and a lot of times we don't get to necessarily all the questions, so get them in there. Is there something that's kind of an obstacle? What's the next thing for you that you need? A lot of times I know that we don't know what we don't know, which makes, stuff like Brent was asking about, the actual mentoring, somebody looking at what you're doing, valuable. But, if you have identified an issue, let's talk about it. How can we help? All right, so a TPO question in the ES. Let's share that screen and dive in. How am I reading recent action in the ES? Curious how you read TPO today so far versus the last few days. One thing I'm seeing is it where it's kind of settling is essentially within the upper and lower bounds. That we could average these two. We could just use the upper one here, maybe somewhere here. And I'm not trying to draw that right where today's low of day is. I think it'd be fine to say we can look at this general area maybe here, but this is, so it's difficult, right? It's not a perfect overlapping easy, just like, oh, there's the upper end, there's the lower bound. This is a little messier. So if we go to the extremes, we've got the upper extreme here. Let me start over. Right here, edge of those singles. And then here is an LVN, a low usage area, which kind of makes sense with where this balanced as well, right? So today we're in that same slot, rotating around. As you saw from my prep, we had a bit of dissonance, a little bit bearish from kind of that 30-40 zone, which we rejected, overnight, and coming into the open, we were working our way lower from there. And then I had a bullish zone, 29, mid 80s. So here. And then there was a couple of, a handful of like neutral type zones in there. One would have been those mid 90s. Another one's up there, just above 30. So right in there. But in terms of the TPO specifically, obviously we have yesterday to monitor. And this was a toothy profile in here, wasn't it? Right? Not a prominent point of control, not a big filled out, mature looking balance. So some work to be done there could be a consideration coming into today. So if you really kind of isolate that, well, this mid 30s lower value area here, that's a reference to watch, right? With this open, right? Are we going to be able to accept back into here and perhaps work on filling this in? Or are we going to remain with the value migration lower into the day? So we didn't test that level during the pit session, at least. Let me pull up the other charts here. So the overnight session, that's pretty much where the overnight highs were. Right off the bat, we tried to test that. We tested here, 32. We tested here at 35. We tested again, pushed up into 34, 35. So several attempts that showed us that the latter of those two things, that we were, indeed rejecting this overnight as we kind of did this. And then we worked lower, well, I guess it was more like this, into the open right here. And so, this is a reference. You can use that and you can monitor for continuation of a shift in value, because what had we seen, right? We'd seen, holiday doesn't count. We balanced in this area. We went higher, right? Balanced in this area. And then yesterday was a break higher out of that. So to see some value migration lower, which is, by the way, like I talked about, where we're balancing makes sense, because if you're going to break lower, oftentimes we're going to revert to a prior area of established balance. And recency matters. And this is the most recent thing that market participants are looking at. And so it makes sense that we would revert into this area and see some balancing in this zone. So, nothing surprising today, nothing too revolutionary, or, no revelations about what's going on in the market. It's just common TPO, value migration, reversion into prior balance type stuff here. So pretty straightforward read there. But, you can use these things in multiple time frames, right? If you really want to kind of group back out. And we did a little bit of this, but just for, an example's sake, let's just get real big with this, right? What in the world could we see from all this, right? Going back to mid-March. Obviously, the market was in an overall imbalance down state with areas where we balanced, right? Island type reversal here, back up into this balance. And then we traverse this balance on this day. And then we start saying, you know what? We're going to hold above here. We're going to balance and continue this value migration higher. And then we got thrown for a bit of a loop here. So we revert back into here. And so it's interesting to see whether or not we get back into this zone or not. And it doesn't, interestingly. It forms its own 3-day balance. And then this day is very telling in terms of getting and a strong close and starting to say, yes, indeed, we do want to continue what we thought was occurring before. So a little bit of a head fake here, winds of I don't even know what a phrase to say, but shifting sands in terms of, news catalyst and a crazy world, right? So all kinds of stuff like that. Continuation, balance, and then interestingly, we settle into what a lot of people, I think, would refer to as a bracket. It's not something that I really use much because I'm not interested in the extremes of a bracket. I have other higher time frames and tools and things that I use, which are going to tell me that the market's going nowhere over, this period of time. I'm going to have other charts that show me that. So I don't need to come in here and say, okay, first it's like a bracket in this area, and then maybe you expand it a little bit on the upper end to say, okay, here is a, a bracketing area, and we'll keep those lows there. Right? Market not going anywhere outside of this for a while. But then this is different, is it? This is something where, we talk about this in market profile course, in foundation, where, we get, and we're really kind of compressing up into the upper edge of this area. And, typically we'd seen this value migration lower, work lower. Here we actually had essentially 2 or 3 days of balance up in this area, and then you see the lower. Here we start to really hold in 1, 2, 3, 4, 5 days up in here, and that's led us into the little microcosm of where we are now. And I can do the analysis on, here's yesterday's balance, value migration lower, overnight rejecting 30, 40, whatever. So you see how you can use even just a simple market profile chart, and you can get more of that multiple time frame type analysis. How you use the information I'm just walking through, that's a matter of your methodologies and time frames that you want to operate on. I think a lot of people don't understand that clearly enough. It's not just anything goes with trading, and you just analyze limitless time frames and collect all these pieces of information. You have a choice in time frame selection, and almost more importantly, B, you need to choose time frames, and where you choose for your methodology and systems and processes to operate. You need to carve out a niche. You need to do something that's fairly specific in terms of time frames. Now, am I the pot calling the kettle black here? Because I use a lot of time frames, and I kind of bounce around in terms of, is this a really longer, higher time frame thesis type play here, or is it all the way down to a almost purely intraday? And by purely intraday, I don't just mean the trade hold time. I mean the information used, right? That DRO type scalp that we talk about with students, right? So time frame is important, and it needs to be assessed and part of a business plan, part of the, with our May advanced group mentoring, we just got through kind of creating some of those things and structuring stuff, and what charts you're looking at and why is very important as you develop all this stuff. So anyways, overall, we have value migration higher on a big time frame, obviously, but there's interesting opportunities for us shorter term traders, which I think most of us on this call are. It's quite interesting that even though we're value migration higher, even though we settle into a big bracket, there's all kinds of other opportunities within that context. But where does context really come into play? Well, that's a more in-depth, like Futures Foundation type stuff, where we're looking at recency of things. We're learning how to weight and rank various time frame narratives, where there's confluence, what multiple pieces of information are telling us to put together a more cohesive story, and where the critical lines in the sand versus just a basic support resistance area to watch out for, and things like that. The insight, the level of understanding we're able to achieve with what we do in terms of the full NADRO kit and caboodle, nothing. I've never seen anything else that compares to it. So it's very, very powerful stuff. And understanding auction market theory and being able to apply it just to one single TPO chart, like we were doing here today, is very, very valuable. So anyways, maybe that's more than you were bargaining for with your question about ES and its movement today, but that's what you got. I saw an RTH DVH chart posted in the chat this week instead of ETH. I think I've seen only ETH charts in the training courses. Does it matter? We use RTH versus ETH. Um, I'm a big fan of ETH for the most part. I think almost the only time where I'm going to start leaning more heavily on an RTH chart is where it's kind of a catch-22 because I'm definitely still going to use both. But, if you have a lot of activity in the overnight session, so here is, 1800 Eastern, okay? We'll have our time axis at the top. And here is the pit session open of your market. And here's the close, right? And here's the next 1800. If you have a very active or volatile, I should say, ETH session leading up into the pit session, you're really going to start to see, whatever kind of DVA that you might lean on or volatility type bands, they're really getting quite wide as you approach the pit session open. And then let's say we open right here. Well, your RTH is going to give you, something more, let's say, usable, more frequently touched, more kind of in touch with what's happening, obviously, from this point forward. And so sometimes if you have a ton of volatility overnight, it's nice to have that RTH chart to get a essentially shorter term read on how value is developing. That's all it does, right? It's a different time frame. That's what it is. We have fancy names for them, but have you really ever thought and considered, what are they? Well, one is encompassing more data points. It's a longer time frame read on developing value, and one's a shorter time frame read. So that's about the only time that I'm like, hey, let me really get a little more focused than normal on an RTH chart. A lot of times I don't even look at an RTH only DVA, and other students have different preferences on that. Some of them really like to lean heavily on it and look at where they kind of line up, and one of them's given an area and confluent with another one. That's fine. That's great. Other times, and here's the biggest downfall I see with people who start to incorporate ETH, RTH, a couple anchored VWAPs, and just all kinds of that type stuff. It's like, well, where can you not trade? You're going to be the classic person, and this used to be me. A lot of students. ETH development value high, ETH VWAP, ETH development value low, RTH development value high, RTH VWAP, RTH development value low. And they think that, price is getting crushed. They're not really monitoring order flow. They get long here and they get stopped, and they get long here and they get stopped, and they get long here and they get stopped, and they get long here and they get stopped. They get long here, it starts to work, and they're stopped. It's like you give yourself so many trade locations, but are those trade locations on the way you're using it on more of a standalone basis really any good? No, they're not. So, if you're getting long, and when and where you choose to really look to get long, there's a lot more to it than that. So that's the danger of RTH. Now, all of a sudden, you've got extra levels, another VWAP, and all the levels that go along with it to do that. Is market depth needed for trading the NADRO method as taught in the foundation course? No, it's not. The only way that I use market depth of any kind is if conditions are really nutty and I kind of want to know what the liquidity is like. Other than that, the markets I trade in, I could care less if there's a big bid or big offer. And, I'm not a believer in all the, maybe I won't even say any names, but products out there that show, the depth over time at areas on charts. I I think those things look pretty in hindsight a lot of times, but I don't see. I've not found the value personally. Okay, that's all the questions we have for now. Anything else, guys? Yeah, Toby agreeing, talking about just switching to top of book data. I think for non-pros, it's like $1 or something like that. It's super cheap. It might be more than $1, but it's not much more than $1. Maybe, what is it, Toby? Was it $3, $1, $4? Okay. And that's for probably the full CME pack, including all 4 NYMEX, COMEX, CME. What's the other one? Why? It's Friday. I can't think of the. Okay, let me do this. NYMEX, COMEX, the CME, CBOT, the grains, those lovely people. Okay. Thank you, Toby. Yes, I'm your local expert. I am an absolute guru in all things futures, and I never forget the name of all of the CME exchanges. Oh, we got a question here from Ed. How do you assess your own performance if you aren't sure where to improve? Ooh, Edward, make me blush. How do I assess my own performance if I'm not sure where to improve? The first thing that jumps out is diving into the numbers, but you have to be careful. And by numbers, I mean like, TraderView stuff and custom spreadsheet stuff or whatever. Trade statistics. You have to be careful with that though, because I'm sure so many of you could put this more eloquently than I, but if you go looking for something in the numbers, you're going to find something. I'm sure there's a better way to phrase that, but you have to be careful just solely saying, this number is not great. Let me revamp my trading to make it better, because it's a finely tuned machine, and almost everything you tweak in trading is a trade off. Okay. So if you want to improve your win percent, I can show you how to do that that's fail proof. Want to improve your win percent? Reduce your risk reward. You're going to improve your win percent. And guess what? Your edge, the overall take home pay, is probably going to be the same. It'll look different in terms of kind of its ebb and flow for the most part. Higher win percent, it's going to be like win, lose big. Lower win percent is going to be, stagnate around, not taking the big chunks of losses, and you kind of like have the bigger wins in there and things like that. So, but so let me get to the real answer. That's enough with the cautionary with the numbers type stuff. But if I'm not sure, and let me also say this, I'm almost always sure of what's not going great. And why is that? That's because we put in the work. Pre-market. And pre-market's not really, pre-market is just a culmination of all the other stuff. What you're telling yourself, what you're doing in terms of processes. Pre-market doesn't just happen. Pre-market is a result. Everything about your pre-market and what you're doing is a result of all the other stuff. And so step 1 is really the journaling. You journal, you note things, you begin to understand both markets better and self better. cues, patterns, triggers, all that good stuff, interesting observations, journal it, write it down, note it, figure out a system for doing that. From there, that's step one. That leads directly into review. And Edward knows all this stuff, but I'm just kind of saying it for everyone here. But I'm getting to a bigger point. So how do I, why I'm answering, why am I sure typically of where to improve? It's because of the journaling and the real-time observations, which go into review work, going back and looking at what went wrong and where, and obviously areas for improvement and things like that, which lead into, okay, here's where you're at. We're prepping to get ready for this session. Let's focus on doing a really good job of XYZ because of the journaling from yesterday, the review from yesterday, the process goals set for today. So, typically you do have that type stuff. I think I also have a bit of a leg up, if you will, because of being a pro essentially, right? And the people in my circles and the people helping me out and just my general line of work and being a coach and a mentor to others and whatnot. It all sharpens my game around those things for me. So but how might I answer this best? Well, it'd be kind of stepping more into your shoes, and how do I think that you could assess your own performance if you're not sure how to improve? And it brings me right back to the numbers. Where are the numbers not perhaps where they should be? And one of the first things I ever did when I got serious into trading was I started sharing my numbers publicly. I was just a retail trader at home because for good reasons and for bad, I wanted to know where I stacked up, if what I was doing was great, run of the mill, or severely lacking, and there's a way more upside and whatnot. And what I pretty much found is that no one would share like I was. no one out there on forums and everything like that was interested in you got your ego folks, you got your liars, all that good stuff who might chime in with some astronomical figures or whatnot. But my numbers, looking back on it now, they were really, really good. And in fact, they were better. The numbers were better than I even was at the time. Just, lucky streak, whatever you want to call it. So go to the numbers. And I think people in our community here, and with me as a resource and all kinds of stuff, you kind of have a ballpark figure of where you need to be with some numbers and whatnot. We need to see good multiples on this ratio. We need to see, the ratio on this to that, look at least this or that, and all kinds of stuff that Edward knows to look for. So look for those things and look at where, if your largest gain is not really a multiple of your largest loss, a good multiple, largest to largest, outside of you had a really crappy, didn't know you had a position on brokerage mess up or whatever, and you took a huge loss under normal circumstances, you should be having some big winners, right? Take a look at that fancy, it's not really fancy, but people like it, that XY plot of a break-even curve. One axis is, win percent. One axis is the ratio of average winner to average loser. And look at where you're plotting on that. And, it's not just going to be like over here, right? Like this is a series of plots connected by a line. You're going to have some losing times and some winning times over 20 trade sample size, right? So if you're each plot, this is boom, 20 trades. This was my next 20 trades, right? Connect them with a line, right? This was my next 20 trades. It was a losing series. This was my next 20 trades, right? And you start to develop your scatter plot, if you will, for, you know, how things are going, and you develop an area that is kind of your area for your edge and whatnot. And if you pop up out of the top and hold, or pop up out of the right and hold, that's significant improvements, which is not your question. But if you pop out of the bottom, that means one thing. If you pop out of the left, that means another. Those are both bad things. You're entering into a substantial drawdown type phase where there's some serious improvements to be had. And again, those numbers are going to assess where to improve. Where I imagine your question is really coming from is not, you're not popping anywhere out of there. You're living in here and you're saying, how can I push here? How can I push here? And that is difficult, right? And it's simply going into, I mean, there's so many things. Where are your deviations from process, right? For a lot of people, they're unable to stop fidgeting with stops, scratching out of things they shouldn't be scratching out of, right? So they're missing out on upside. For a lot of people, they're also missing out on upside because, again, they're micromanaging a trade, even one that's really working quite well. They come up with a reason to say, well, that's good enough, you know, classic type stuff. So do you have the process there for trade management, and what are the deviations you're making from it, which are putting a damper on performance? That's one way to greatly improve edge, because you're going to improve that MFE side of the equation. So mistakes you're making. And then other things is just getting better, right? Like starting to identify how often, you know, I have a student that's recently identified that their win percent on the first attempt at an idea is atrocious, and their first reentry, maybe they include first or second reentry, so all reentries, but they limit themselves to 3. So either first or second reentry on the ideas have tremendously higher win percent. We're talking like 15% to 50% between them. That is first versus reentries. So what does that say? Well, that says they're early a lot, right? They're early a lot. Their first entry is in a series where it's going to be more of a complex pullback before it works. And so they're trying to get short here, or maybe they're really bad and they're trying to get short here, you know? So changing the time frame, looking for more of that medium term shift in momentum, and understanding situations where that's most appropriate. So that's some skill-based things, you know, that we look for in groups. And it's often one of the first things I point out with people is around identifying those times where you do need to transition to not trading direct momentum, because there's not enough momentum in that market for that to be effective based on the bar to bar overlap you're seeing as you stalk that entry. You know, order flow skills, right? Using those to help, quite frankly, avoid a loser here and there, you know? Improving those skills, you know, improving the skills of putting it all together, improving the skills around narrative, and making sure you're doing the right things day in and day out to assess each of those components, right? It's, you know, for too many people, it's let me look at the fills. How do the fills look in terms of timed rotation and whether or not they were a winner or a loser? And I kid you not, that people don't even think about it, but that's about as far as their review goes. They may write a page and a half of stuff, but it's all based on how was on the trading time frame the fill, how does it look in hindsight in terms of you know, was it timed? And again, in hindsight, not proper rhythm, which you can still get run over and have good rhythm for the entry, right? And then did the trade work or not? And they either feel good or bad about it, or they write good things or bad things based on if it worked or not. A lot of people in this community do that. So, you know, do more of assessing each component. What were your hypos and how good were they? That's one component of analyzing your performance. to look for improvements. So that's a big takeaway, is to, look at each section of what you're doing, not just where you click buy, market, or sell market. And that will lead you to deeper and deeper assessments of your performance. Great question, Edward. All right, guys. Thanks for being here. Have a great weekend. We will talk soon.